was, I was looking at a bunch of charts here into the close today, and all I can say is, Fed, get out of this market. Fed, move away. Here's a 30-minute chart. I want to look at a few 30-minute charts, which basically gives us a good, on the way I've got these charts scaled about 15, 20 days of views of different indexes. Here's the Dow Industrials. Again, you can see. Here's the you can see where we are. We're totally in this, and I talked about this a few weeks ago. And unless we go over 13,700 or we break down under 13,000, we're stuck in this range that we've been in now for really going on 6 weeks since the end of July when we first broke. And if you look at it from a bigger picture in the Dow, you can see this. We haven't gone anywhere. I mean, people, Dylan Ratigan and all the usual suspects are getting all excited, but we're still sitting under that 13,700 level on the high. We've been up here before 2 or 3 times. This is probably the third time. And we've been down here 2 or 3 times. And outside of that, we've had an outlier once down here to 12,500, and we had an outlier up there above 13,700, and that's all since August. So since we first broke down in July, we have not gone higher, which isn't bullish. We're well below where we broke down, and but we're just kind of hanging in there, waiting for the Fed. So the Fed's going to come out, and are all the credit problems going to go away? Absolutely not. Again, bigger picture, you got to look at gold. So what's happened in that same time? If we were to bring up a gold chart, if you bring up a gold chart, you'll see that gold has skyrocketed. You'll see that wheat has skyrocketed. We talked about this yesterday. So gold here, again, the YG contract closed at $717.20 today. This has gone into a breakout mode. So that indicates inflationary measures. We've got wheat. We've got all the. We talked about this yesterday. I don't want to beat a dead horse, but it's kind of where this market is. The VIX, again, pushed up to 30 on Friday and is back down to 24, 25. It was slow, very, very slow today. Not a lot happening. So the VIX is continuing to drip, but staying well above 20, staying well above 15, which is kind of my must stay above 15 area to be bullish. And really, as long as you stay above 20, everything's really looking good for the long volatility traders. So this changed, I don't know, back here in June before the market dumped, and gives a little indication that something was on the rise, just as it did back here in February. But we've stayed up here. Here's the big difference. I keep hearing people use, just like February, we're gonna recover again and keep going. Well, the difference I see here is that back here we bumped up here to 20 and fell down real quick again, and based down there for another 4 or 5 months. Well, here we are. We've had even a bigger move, and we've pulled back, but we haven't even come down to these levels again at that $20 level on the VIX. So I continue to think with oil being up here. Here's the oil chart. Oil's 79.90 here as I put this taped to bed. Oil is trading 79.90. Another inflationary piece. I mean, if the Fed lowers rates on Tuesday, they'll only do a quarter, and then they'll wait and see again. I don't understand how they can be. They should be raising rates. They still should be raising rates. They haven't gone high enough. They need to get out the fat in the system, or they can keep the game going like it appears they want to, and see what happens. The long bond, again, let's give a quick review. The long bond, we were short coming in today at 114. We covered down at 1012 and 3/4 or so we made a nice trade on the long bond on the short side. We also got short today, the SPOOs, and are staying short overnight. We got short in the 1500 area. They closed at 1498.50. We took off half on the move down here at the close of the day and took off about 5 points. And I will put those back on at higher prices at this point, but I remained short half my position into the close. So the SPOOs are looking, they were looking bullish again. That trend line was there all day. Once that trend line broke, again, I said that looks very portends poorly for the bulls, and it did as we proceeded to sell off to some resistance levels here near 1493. So we did take some profits there as it went down, and I will put them back out on all bounces at this point. Again, I want to be a seller up to about 1513 or so on the ES over the next few days. And if we go over that, then we're probably going to go back and test the highs. If we don't, we're going to go lower. Again, what we've seen here over the last 3.5, 4 days is quite a V bottom, 1450. Now that we've rolled over to the Z contract, 1450, 1504 or so was the low, and today we hit all the way up to 1504. So 50-point move now in less than 3 days. I call that a V bottom. Can we continue going? Absolutely. Do we typically? No. And I would place my bets that right now this rally, as the volume today was just pathetic. There was no sellers around, granted, but the volume was just weak, and I think it was sucking people in that are late to the third day of this V bottom rally. So I love to be a seller on this. This is a psychologically difficult thing to do: sell and hold and wait. But I believe it's the right thing to do right now, and I'm going to continue maintaining a short stature, and again, knowing where my risk is, and my levels will be taking me out if we go higher. But I've got to stay short, and as Axl Rose would say, just have a little patience. And we were having some fun with that song in the room today. So take care, and we'll talk soon.